Hey, Steve Saretsky here. As always, this is a Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, all I ask is that you hit thumbs up and subscribe. I appreciate the support. As always, if you have any questions, comments, put those below and we'll banter back and forth. A little bit of housekeeping before we get in to things. I'm doing a sort of a talk with CIBC on May the 2nd from 6 to 8 p.m. Where basically I'm going to break down the Vancouver real estate market and they're going to talk sort of the mortgage financing side. It's an event that's more geared towards people like looking to get into the market, but really I'm inviting you as a way to sort of come and for me to really meet some of you, shake some hands, have some drinks. I have really nothing to sell you. You don't have to be in the market to buy to come to this event. Just come hang out. If you're interested in that, you can shoot me an email. I'll also put that below. It's steve@stevesaretsky.com and I'll send you the details. But just throwing that out there. Again, I don't really have any financial money invested in this event. Basically just offering you guys an opportunity to come hang out. Now getting into it, some interesting comments from the Bank of Canada this week. Bank of Canada Governor Stephen Poloz, as well as basically the one under his right-hand man or woman, Wilkins, came out with some interesting comments this week. It was Wilkins that said, quote, "We believe the Canadian housing market correction is over." And then Poloz came out and said, "We believe the Canadian real estate market fundamentals remain strong." So it's very interesting to have those comments come from the Bank of Canada, because just this exact same week, the CMHC came out, it's government's own mortgage insurance company, stating that Vancouver and Toronto real estate was overvalued, that it was in that severe red correction potential phase, where they have rapid price growth. So the two sort of contradict each other, and this really brings me to the whole point of why I do these videos. It's why I encourage people to sign up to programs like Real Vision TV, to really go out and do their own research, because there's a lot of information out there, there's a lot of interests that people are trying to push, and you really have to sift through all that information and come to your own conclusions. Central banks really have a mandate to instill confidence in its own currency, right? So they're never really going to give you the full scope of things, but the reality of it is the average typical person relies on that information, and it's, not to compare the two, but it's usually the same narrative. I mean, in 2008, a couple months before Lehman Brothers collapsed, Ben Bernanke, the head of the U.S. Federal Reserve, came out and said that they didn't foresee any recession in the horizon, that the housing market correction was basically at an end. And this is, again, we know how that played out. It was the same thing with the National Associations of Realtors chief economist, David Elira, somebody correct me on that, who constantly sort of promoted the housing market. Even in 2008, he said it was the bottom, things were picking up. 2009, things were the bottom, was picking back up. Who was just consistently wrong, and of course he eventually quit and came out and did a piece in the Wall Street Journal saying, yeah, he was kind of under the influence of the Association of Realtors, and he basically had to step aside because he just couldn't take the pressure and the heat anymore of doing that. So it was interesting to sort of get those comments, to see that he had to basically pander to the association. But anyways, yeah, I mean, that sort of brings it into where the Bank of Canada is coming from. We're now really starting to see some higher interest rates kick in, right? So, I mean, when you have, nobody knows for sure, and that's why I always say, do your research, come to your own conclusions. But when you have, like in Vancouver, right, you have higher foreign buyers tax now, speculation tax coming in. These mortgage rule changes are now just starting to sort of work its way through the system as these pre-approvals expire. And you have, national home sales in the first quarter of 2018 down 16%, and they're saying that it's over. I tend to disagree with that, but and you have to look at where we are in the context of things. The Canada 5-year government bond recently inched up to nearly a 7-year high, and that 5-year bond is tied to 5-year fixed rates essentially. So as that bond yield moves up, that's going to increase your borrowing costs on your mortgage side. So, and that's really out of control of the central banks. That's really up to the bond market. And as we're seeing inflation start to ramp up, those yields on those government bonds are starting to tick up, and that's resulting in these higher borrowing costs. So that's hugely important to real estate markets, because people rely on borrowing to sustain prices. So rate spy came out earlier this week. So TD increased their 5-year overnight lending rate by 45 basis points, which was the largest single increase in 8 years for TD Bank. Just today, RBC also followed suit with a similar increase. And so as per rate spy, if they get one more big bank following suit with that, that'll basically set the new benchmark for the stress test. And I think rate spy was also saying that this would reduce borrowing power by an additional 3% based on the level that they have increased their rates to. So again, we already know the stress test removed 20% of borrowing power. These increases in the rates are going to effectively reduce it by another 3%. So again, you're chipping away at borrowing power. Higher rates, we don't know how those all shape up. It's certainly a lot of pressures coming from the U.S. That 10-year U.S. Treasury, which is very, it's almost like a psychological threshold, recently has been sort of flirting with at 3%, which is quite a significant move up. So there's a lot of pressures in that bond market, again, which are really out of the realm of central banks. I think the Fed is really intent on hiking, and we're going to ultimately import some of that. So that remains to be seen. Again, I don't know how this all shapes up. You have to come to your own conclusions. But I think this is extremely important for people to follow and look at. Yeah, I mean, that's pretty much what we have for this week. If you're following interest rates, its impacts on the market are substantial, because this really all comes down to what people are able to borrow, right? So you're chipping away with that. We're starting to see obviously weaker sales not only in Canada but Vancouver, BC, etc. And that's pretty much where we're at. So just as a side note, I did an interview with BNN the other day where I talked about this, so I didn't really want to go over it too much today, but as we're talking about borrowing and interest rates and that sort of thing, you have to look at also what governments are doing. Obviously, we have in Vancouver, we have a vacancy tax. It's estimated they're going to generate about $30 million in revenue this year. So that's substantial. I mean, it's more so like a psychological effect. I mean, the numbers weren't huge for how many vacant homes they had. There was a lot of exemptions. I don't know if people were not reporting them properly, but I mean, this still sort of plays on that mindset, right? I mean, you have so much taxation where it really starts to discourage investment. That's why we've seen a lot of that foreign money dissipate. And, all you have to do is look at luxury sales on the west side of Vancouver and see that they're just getting decimated. That foreign bid just isn't there. When you have a 20% foreign buyers tax, a speculation tax, a luxury tax, a school tax, empty homes tax, an Airbnb policy, just discourages investment. Like, capital is going to flow. As I've mentioned before, direct foreign investment into Canada fell, I believe, 26% last year. So you can see that in other industries as well. And then recently, the BC government announced that they're going to create a database in legislation. They're now putting steps forward to get that done. They're requiring developers to create a database around pre-sales. So basically what's happening before is it's such a wild, wild west market where developers are holding those list of buyers close to their chest. And I can tell you it's mostly investors, a lot of people that are buying up bulk number of units. And I mean, we don't know. There's obviously reason to believe that a lot of them, when they go to flip these contracts many times before it completes, they're not paying capital gains. And so these are really the CRA, in order to obtain that list and go after the people that have been avoiding taxation. The CRA had to take the developers to the Supreme Court of Canada to obtain those lists. So it was very, very difficult. It's a tough process for the CRA. So now the BC government is saying, no, we're going to mandate that you create a list. We're going to have access to that list. We're going to share that list with CRA. So obviously anybody that was previously hoping to or was doing sort of these speculative flips and hoping to not declare that taxable capital gains is now going to be subject to that. So does that discourage some of the foreign investment in that pre-sale market? Potentially. I don't think it's going to be like groundbreaking per se, but I think it's just another thing that you're tacking on. Because again, we do know that a lot of these pre-sales, particularly in Vancouver, these luxury buildings are being sold in sales centers in Hong Kong, and a lot by investors that are not ultimately end users. It's more of like it's a speculative play, right? Particularly when you're paying 20% above market value today. So does this, yeah, I don't expect this to hamper the prices in that, but do I think it could pull away certain investors that maybe would have otherwise bought into pre-sales? I do think so. So that's something that we'll be watching moving forward. Again, this is hugely important when you have a record number of housing starts, you have a record number of units under construction currently, and you have a record number of units, condo units now completing. So we'll have to wait and see. Yeah, anyways, that's all I got this week. I'll see you next week.